In today's video, guys, we're jumping into the world of XRP, and we're going to be taking a look at what's been going on most recently with the price action and what might actually happen next based on Elliott Wave theory. This chart here is XRP paired up with the USDT. It's on the 4-hourly chart, and we are using Binance as the data source. So if you wanted to replicate this, those are the parameters that we're currently looking at here. Okay, so what we're going to do is we've kind of removed a lot of analysis here, and I'm going to break this down from the top to the bottom. Okay, so this here being our 4-hourly chart, we want to kind of highlight a couple of things to start with, right? So right at the very top here, we have our high point from April of 2021. Okay, this is $1.96.69 according to Binance. Okay, so this becomes our little upper area here and to kind of be thinking about. This is really where the correction started to happen. Okay, now if we actually take the price point from this high down to the lows that we've currently already had just down here, we can see that we've dropped 85%. Okay, so a pretty significant drop to the downside, but I still would expect a little bit more. I don't think this correction is necessarily over just yet, and I'm going to go through what I think is actually going on here from an Elliott Wave theory perspective. Okay, and this will not be referencing things such as higher lows or higher highs or cup and handles and inverse head and shoulders. I leave all that nonsense to other guys to kind of track. What I'm tracking is Elliott Wave theory, which basically is the psychology of people interacting in the space. Specifically when there's an emotional reaction given by a Fibonacci-based number, right? So, for example, usually traders are going to react around the 61.8% area, often known as the 618 in the Fibonacci retracement areas, 1.618 or 168, for example, percent. So yeah, kind of tracking how people behave around these areas. And Elliott Wave theory tracks the waves within those movements, right? And basically, for the most part, there's 3-wave moves. 3 waves are usually corrective, which means they're short term, as kind of given by a 3-wave structure. And usually these have very specific Fibonacci relationships. And then we have 5-wave structures, which tend to be more trend based. Obviously, 5 waves is larger than 3 waves, so it goes on for a longer period of time. And these are often known as trend, with usually 3 waves in the direction of the trend and 2 counter to that. Okay, whereas normally you only have 2 with a corrective short-term move in the direction with 1 counter to it. Okay, so for example, an ABC is a short-term 3-wave structure with 2 waves going down and 1 wave going up, or vice versa, and basically 2 in the direction of the trend, or 2 in one direction with 1 counter to that. And then of course we have the impulsive structure, which many people might be familiar with, which is 5 waves. This is basically 3 waves in the direction of the trend, or creating the trend, and then obviously 2 waves counter to that. Okay, so when we dive into this analysis, understand that I'm going to be using 3-wave structures and 5-wave structures to understand what is going on specifically within this 4-hour chart for XRP. Okay, so down at the bottom here, we've got our low point. This is basically after 𝗕𝗘𝗪𝗓 had dropped the lawsuit on Ripple. We saw a mass sell-off, billions of dollars worth of damage, and we dropped down to 17.35. We rallied up to $1.96.69. Okay, so we have a benchmark here, and we are currently between these 2 values, right? We have the low and we have the high. And what we're trying to do is ascertain whether or not the 85% drop is the bottom or whether or not we've got more room to the downside. Okay, so that's the purpose of this video. Hopefully you found it useful and informative. If you have, hit the like button. I do appreciate that. And if you are new to the channel, make sure you subscribe, tap the bell, select the notifications, and you will be kept up to date with everything that we do here at Cheeky Crypto. But also join us in Discord with the link in the description below, and we have a lot more materials on Elliott Wave theory that help you understand exactly what's going on here. Okay, so what we're going to do is we're going to break this down. For starters, from our high point up here at $1.96.69, we can of course see and acknowledge that we actually have on a macro scale at least, a 3-wave structure to the downside, right? Now, for the most part, we've got overlap. Now, when it comes to Elliott Wave theory, overlap is all corrective. You're in a trend, you don't tend to find overlap unless, of course, you're in a diagonal move, which is more complex. But in this particular example here, it does look like all we have is a structure move down to here with some sub-wave counting, some sub-wave counts going up, and then again another three-wave structure of a sub-wave count inside here, just like so, bringing us in. So we know that this is a macro three-wave corrective move just here. And then, of course, we can take a look at this move up here as well. Now, a little bit more on the complex side of things, but we're going to call this a three-wave structure. And this one actually looks more likely to be a 335 corrective type. But basically, we end up moving on up. And, you know, for the most part, I'm actually going to put it right about there. Okay, so we have this high point just here. And we can see here that we have three waves up, we have three waves coming on down, and then here we have a pretty clear five-wave move. Now, as I said, right, five waves tend to be trend-based, but in the case of this, where they're wrapped inside a corrective move, they're actually corrective, and this is actually just showing us some FOMO activity, some kind of structured move to the upside, but is short-lived and we break down. What it is not showing us is like something like a 5-3-5-3-5, which is the actual correct structure of an impulsive move. Okay, so when we start seeing a five-wave move inside a C wave, we know it's a 3-3-5, and it is just corrective short term. Okay, it's not going to continue going up, for example. So when we start zooming out here, we can kind of see here that we have then a three-wave move and a three-wave move, and then we start to break on back down. Now, what's interesting about this breakdown is, again, we have plenty of overlap. We have this bottom area just over here, and I'll go ahead and just mark that on here. And this one was 54.89 cent. Okay, we bounced from here, we moved up. This is pretty much aligned to when Bitcoin, I think, was at 32k and moved up to about 48k, and then obviously we broke back down from here. Now, obviously, with macro moves, and I'm going to potentially might talk about those later in the video, but for the most part here, we can now start mapping out all of these moves. Now, we can start with the smaller side, just over here, where we can see we've got quite easily a three-wave structured move there. We can see that we have a three-wave structured move up here, again, all short-term. And again, over here with us, triangular pattern right in the middle. This is a B wave. So we know that this is also corrective. Right? So essentially, if we were to then map this up into a larger wave count, so rather than just doing all the micro movements, we can then go ahead and acknowledge that this is an ABC structure, a three-wave structured move, with the sub-wave counting indicating otherwise, or indicating that we've got, you know, potentially impulsive structures down here, for example. Let's say impulsive structures, but five-wave structures coming down here, but it's all a part of a corrective pattern. Okay, so all the way up until we got to kind of 54.89 cent, it was all corrective. There wasn't anything here that was overly concerning or anything like that. And, you know, for the most part, we can actually argue, let me just kind of get my bearings here for a second. Yeah, so it looks like this area here is that, and then this one to here could potentially be. Let me just check one thing, right? So we're going to grab our fibs, and we're just going to quickly check where this low and this high marry up. Come on, I can get that up there. There we go. And then we're just going to pull this over to this high here, and yes, we do drop down and we hit that point. Okay, so this structure here, I'm going to count slightly differently. I'm going to say that this is our C wave low, okay? And then we move on up. This is a really important high point just here, because this move and this actually now shows us with our, how do I say it? It's now going to be our, find the right words. This is going to be our ending move, okay? This is the last part of the structure. So there's actually quite a few things going on here. This is actually a really complicated one, a complex move. So I'm just going to adjust this to make the most amount of sense. Okay, so run up, pull back down. And I'd say that this is probably some kind of zigzag pattern potentially. But anyway, I'm not going to kind of go into that in too much detail. It is still a three-wave structure, and we're still looking to pull back down, even though this might not be, you know, exactly perfect in kind of how I'm trying to explain it within three-wave structures. But if you join us in Discord, we've got some material that hopefully will clear up what's actually going on there. It looks like a bit more maybe of a running flat, something to that effect. But anyway, over this side's more important, because this is really where we're starting to see some really big kind of structured moves to the downside, essentially from this point just here. So this pullback here, okay, we bounce up and then we pull back down and so forth. Now, what I think is actually going on is we've got a couple of different ways we can take a look at this. The first one could be that we take this low point and this high point, okay, to take our structured move to the downside. We find that up there. I'm going to have to just manually get that. Okay, we then pull this over to this point here, and you can see that we've come down just past the 1.236. However, when you take it from here, grab that low point, okay, and then we move it up to this high point, right here and then move this over, we can see that we've passed the 1.618. Now inside this little structure, we can straight away map out a 5-wave drop, okay? This being wave 4 coming up here, and this being a little 5-wave move. Okay, so we have 5-wave structures, but this is not the end of it because this is actually nested inside a bigger structure over here. So we have wave 1, wave 2, all of this is just wave 3, and we're currently in a wave 4, looking for a wave 5 to come down. Okay, so when we start nesting these things together, they call these degrees within Elliott wave theory. So this being another degree down from our move here on the macro. So I'm going to remove that one, and I'm going to remove the fib there. So you can now kind of see that we have this structured move to the downside. It's gone past 1.618, which basically converts a 3-wave structure into a 5-wave structure, at least from our expectations of Elliott wave theory. Now, obviously here we have one issue, is that's how do we start here, knowing that this is a potential move to the downside. So what we're going to do is I'm just going to tidy this up a little bit. Specifically with how we kind of end up at this point, because this has to be a 3-wave move, this has to be a 3-wave move, and then this drop down has to be basically a 5-wave structure, which is kind of what's mapped out. So if I go ahead and now take this high here, here, and here, we can kind of see that we have a 3-wave drop. It doesn't necessarily take into consideration what's going on here, but this does now look more like a 5-wave move. So again, I'll map that up just like so, okay? So then we have a 3-5 move like that. Doesn't necessarily actually make any sense. However, starting with a 3-wave coming down here and moving on up to here, this makes sense, okay? So this becomes a 3-3-5 structured move to the downside, where if I take this low point, again, of our wave 1 low down here, we grab hold of it. I'm going to have to just manually eyeball that. And we take it from this high point up at here, move this over to the top of our wave 2, and we can start to see that actually, you know, what we're doing is bouncing on top of the 1.236. So again, nothing there is actually telling us that this is a macro move to the downside. Of course, it could be possible that when we actually complete this 5th wave coming down lower, that's actually a wave 3 and we actually bleed out a lot more. Okay, so but without kind of confusing things, that's way off in the future, and there's no guarantee of that just yet. Okay, so although technically possible at this stage, it isn't something I want to talk about until we can actually kind of, you know, document out those moves and make them a little bit more real. So keeping that in mind, we know that this has to be a 3-wave drop because it doesn't make sense that we have a 5-wave structure from the top there, meaning that this bounce here has to be our bounce for a B wave, and then this has to be our C wave coming on down lower. So on that note, well, essentially what we've got is this is a giant A, B, and then pulling back down into a C wave. Okay, so this is really important. I know it's quite complicated maybe if you're not following, but essentially what I'm trying to tell you here is that there is more room to the downside to be had. Now, in validation, or in order to prevent this 5th wave coming down, we have to move the price of XRP higher than 54.89. That's this dashed line just here, okay? So there's a high probability of more room to the downside to be had before we can really acknowledge you know, a reversal pattern. And even if we do pull this back down into this low range, it does actually then pull into question whether or not this is a leading diagonal taking us down here to this particular point, and then, you know, this is actually just a wave 3, and then we go down even lower afterwards. So it's a possibility, but I don't think it's necessarily something that we could really acknowledge just yet. Now, the move in the middle here, these 5-wave move, is very unusual. This is not something you would normally expect to see in the space. Specifically when you use Elliott wave theory, a 5-wave random move like this on the 4-hourly chart is incredibly unusual. It is possible, of course, that you do have these things, but it's very much out of place. So, you know, there isn't much more I can really talk about why that is there, what this is doing in this particular position. But essentially looking at all of these structures and how they've actually formed and how they're forming and how they're moving, you know, it is what it is. It simply is there. I have no explanation as to why it is there. You know, it's just a false flag, etc. We found this move upwards in September, a big surge up, but actually failed to actually do anything. Bitcoin reversing down, and basically, yeah, maybe that's how that kind of happened. But essentially, yeah, it is what it is. I can't really focus too much on that right now. So let's now focus in though on what's going on in the here and the now, right? Because what we do have is this fourth wave move just down here. And, we were tracking some micro movements recently, trying to see whether or not we've started our fifth wave move down lower. However, a lot of that's been invalidated. So let's go ahead and now take a look at this, right? So as I zoom in here, we know that this is a macro fourth wave up from this low point. Okay, so the first thing I'm going to do is I'm going to go ahead and mark up this low point. It comes in at 28.72 cent. Okay, here we can see that we moved up. It looked pretty strong move upwards, but we came right back down again as well. Okay, now this looks like a three wave move, again, short term, right? So we move up with A, B, and then up again in C there. So you can see it's a pretty sharp increase here with a three wave structured move. But essentially right now, what's possible is that actually we actually need to move back up. Now, we could see a running flat. No, actually we can't now because of this pullback here. So we end up with a 3-3-5 structure coming down here again, just another three wave move, and then we're moving on back up. So what I'm going to do is I'm going to now also get another horizontal ray and just push this here. Okay, so now we're trading inside these two realms, right? So let me just zoom back out again, right? So we're talking about being inside this area, right? Between 17.35, which is our low down here, and our high point way up here at 196, right? Then we're pushed in our wave one invalidation point at 54.89. And then we've got this another channel just inside here, which is where we're operating right now. And what we're waiting for is confirmation of which way this is going to go, because it does confirm whether we are in wave 4 or in wave 5, simply by analyzing whether or not we are likely to see some kind of significant surge upwards higher than 38.71, or whether or not we drop down lower than 28.72. Okay, so we're right inside this little point here. So as I zoom in on this, let's run through the several different scenarios. Okay, let's go for the bullish sentiment to start with. If we take this this entire measurement here, which is basically just using a fib from the high to the low, we move the fib over to this recent low point down here. Okay, so just moved it over, and this then shows us a 1-to-1 ratio where our wave 4 theoretically could potentially push up as high as 41.19. This basically would allow us to go with a big A, B, and C structure like so. Okay, so a big three wave move, and we could see a 5-wave structure inside that C wave. That's perfectly fine, but we do know that it's inside an ABC structure like this. Okay, that could then lead us into the fifth wave lows afterwards, okay? Failing to go up higher than 54.89, which would be invalidation of the fifth wave, okay? So hopefully that makes sense. So there's your one scenario there. The second scenario, so what I'm going to do is I'm going to delete that off, okay? So that's just our bullish sentiment right there. There is, of course, the possibility that we're actually already in the fifth wave low, and our wave 4 high is up here. Okay, it's 38.71, and what we're witnessing here is a big wave 1. This has been a big wave 2 that cannot cross 38.71. Okay, it's wave 2 is never allowed to go up there. Okay, it's never allowed to cross wave 1's max origin position, so it can't go and retrace more than 100%. So basically, this could be a wave 1, this could be a wave 2, wherever that lands, and then we pull back down into wave 3, 4, and 5. Okay, so if I zoom back out and just pull this in, for example, we'd end up with something potentially like this, okay, and just ushers in this this area here. Now, under this particular example, we take a fib from the low point down here at 28.72 up to the high point, which comes in up here at 38.71, and the wave 5 typically would retrace to anywhere between the 1.236 and the 1.618. Okay, so straight away we have this little yellow box area. So I was overestimating, I guess, the depth of the retracement. So we'll just go ahead and just pull these in into the realms of this 1.618 low, for example. This would actually then put us somewhere between 23.88 and 26.77 on that pullback to the downside. Of course, the higher that wave 4 goes, as in, we have that one bullish sentiment taking us above 40 cent, that means that the lower the fifth wave will go. So the higher the fourth wave, the lower the fifth wave. Okay, so if we are done and we are where we are, then we are looking at pulling back down towards these lower ranges. Now, that's kind of where we are on XRP at the moment. Now, all of this is a three-wave structure, okay, which is really important to understand as well, because a three-wave move inside here is very much aligned to what I think is going on with the daily chart, okay? So although we have overextended this C wave coming on down, dropping down towards 23.8 cent could be potentially dangerous long term. And I'll run you through what I think that might look like. So we've started our wave 1 up here at $1. Okay, and then we basically pull back down. Let me just check that high is 101.31. Okay, so that's where we started our 5-wave drop. However, it's possible it also started up here or even up here, right? But if we do take this this low point, again 54.89 up to the high point up here at actually $1.39, so that's the high point I'm going to take on this one. Yeah, I'll take that as the high point there. Then move this over into our bounce position, which we would put up here. In fact, yeah. Then essentially, by not dropping down lower than 23.88, it prevents us from hitting a 1.618 at 22.44. So that basically would mean that this would be the end of the correction. It would be a 3-wave move, and it hasn't turned into a 5-wave move or anything like that. So that's really important just for the macro perspective on the larger timeframes. But essentially here for XRP, you know, from a psychology of how people are reacting, we've got 2 options. Both options are going to be confirmed by crossing one of these paths, okay? So we are either going to be dropping lower than 28.72, confirming that we are dropping down into the 5th wave low, or traveling up higher, which will be as anything above 38.71, confirming that we're still inside our 4th wave higher, meaning the 5th wave is yet to come. And obviously, once we have had the 4th wave high, we would basically be looking at basically coming down quite significantly into the 5th wave low, and there's a huge opportunity in that if you're a trader. So obviously I'm not a financial advisor, I can't give you financial advice. All I'm doing here is giving you my thoughts and opinions on the data inside the charts, and you absolutely should not buy or sell or do any trading based on anything I've spoken about inside this video. You should absolutely do your own research, come to your own conclusions, and maybe consult a financial advisor if you have one. But yeah, I'm going to leave the video there, guys. I know it's a bit of a lengthy one, kind of talking about what's going on. My expectations, if I'm being brutally honest with you, are that we are likely to push up ever so slightly higher, but I don't think we're going to break past 38.71. That being said, it is still a possibility, and I've given you the scenarios of what would happen if we do, and obviously if not, then we are just tracking down into this final 5th wave. If you found this useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. With all that said, done and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.